Well, hey there, and welcome. This is Dave Freitag, your Wall Street Cowboy. Thank you for stopping by. We sure appreciate you. This week, we're going to talk about the Bulls and Bears for week 34. We're going to also go over week 33 and how we did with our Bulls and Bears. We're going to take a look and see what we might expect for this week and in week 34. So sit back, enjoy the ride, and remember, hit that subscribe button and come back often. Tell your friends and let us know what we're doing right and what we're doing wrong. We sure appreciate you. Please remember, we are not financial advisors. We're not a broker dealer, and we don't make recommendations or suggestions for your particular situation. We do use securities, and we use them as examples for illustrative purposes only. We show all of our images out of a paper money trading account, so it's hypothetical in its nature, and you could not possibly think to duplicate what you're seeing here because situations have changed since we did this presentation. Investing does involve risk, and you can lose all or some of your money. And depending on the type of leverage you use, you could lose more than what you intended. So please make sure you understand all of the elements of options trading before you start a regimen of trading the stock market. Okay, let's start by taking a look at last week versus this week. Last week was week 33. We are in week 34. Interestingly enough, the top 1, 2, and 3 sectors for this week were also the top 1, 2, and 3 sectors for the month. So what we do is we look at our monthly rating and we look at our weekly rating and try to see if we can get a little bit of an edge. The week 34 leaders was tech, consumer discretionary, and communication stocks. And then number 4 was not industry. That came in actually at number 9 this week. Number 4 is the S&P 500. The S&P 500 was buoyed higher by 3 sectors. That means the rest of the sectors underperformed the S&P 500 overall. Another way to say that is that tech, consumer discretionary, and communications all were so strong that they were able to overwhelm the bearishness or the pedestrian nature of the other sectors. So if you were in tech, you were probably rewarded pretty well. If you were in energy or utilities or even financials, you probably had a tough week. Now, last week, our number 1 sectors was telecom, and number 2 was industrials. Well, both of those fell this week. Telecom fell to number 8, and industrials fell to number 9 on the week. So those were some opportunities to take some profits, and some people did. The areas that did poorly again were the financials, utilities. So it continues to be risk on. We're taking more risky securities in the tech, the consumer discretionary. That's probably not as risky as tech, but the communications sector. These are areas where that's risk on. So investors are feeling pretty comfortable with putting on risk, although the market did go sideways. So that gives us a look at how the sectors are going. Let's take a look at week 33 at our Bears and Bulls and see how those top 20 performing Bulls and those worst performing 20 Bears did. Alrighty then. So last week we had AMD as our top performing stock of the top 20. It had a performance over the previous 30 days of up about 50%. That's pretty darn good. Over the last quarter, it's up about the same, about 50% over the last quarter. Some of the other more familiar names didn't do so well. The UPS, that's why it's shaded in red, had a down week. You can see down here, it was down about 1%. So if it's in red, it means that overall, by the end of the week, MGM was down as compared to where it started for the week. Now over here on this other side, we have a column that the actual high of the week. And if we reached our target and exceeded it, then we would get a green shading. So in this case, LB reached a high of 31.33 and our target was 27.64. So it more than exceeded our target and would have been an opportunity to capture a nice little move on that. This column over here just gives us the difference, what it missed by. In other words, the high of the week for AMD was 84.41. That was $1.13 short of our target of 85.54. Pretty easy to follow along with. So we had some pretty good stocks that would have done pretty well, but overall, the price action of the week, as we discussed a little while ago, was dominated by tech, consumer discretionary, and communication stocks. If you weren't in those stocks, you probably had a pretty flat to maybe a slightly down week, depending on what sector you were in. So this doesn't surprise me much. Now let's take a look at our bears for the week. Okay, so on our bears of the week, we had FE, which had led all of the 20 stocks lower. It was down 28% going into last Monday for the previous 30 days. It did continue to move down, and we'll see just about how much in just a moment. Here, Intel was one of our bears, and it actually had an up week. So if we look here at Intel was up about 1%, even though we had it on our list of bears. It's been down 17% over the last month. Was that 16% over the last quarter and 27% over the last 6 months. So it continues to be a underperforming stock with opportunities as a bear. The ones that hit our low of the week, our target, or exceeded it, was Western Digital. It went down to $33.50, and we had a target of $34.50. So it ended up being a really good opportunity. It started out the week at $35.74. So it had an opportunity to profit depending on the kind of position that you had. Another one that did well for us on the bear side is EVRG and Gilead. We talked about that last week. That it's been showing a great deal of weakness and continued to show weakness. So these were the bears of the week. This list probably did better than your bulls of the week if you were bearish this last week or somewhat neutral on the week, which is about what we had. FE was down 4.16%, but did not hit our target. It missed it by about 63 cents. So although it did have a down week and probably could have made you some money, it was close but didn't quite get to our target. So that's how our bears did for last week. Let's take a look to see how our bulls and bears are shaping up for this week. All right, drilling down to our bulls for the week. You may notice that I have this alphabetically sorted this time. I'm going to do that going forward. Last week we had them still sorted by the number one performing stock is in the top spot, number two performing, and so on. So I'm going to do it alphabetically. It might be easier to track that way, at least it is for me. So Apple is on our top performers for the month. It was up 33.95, or almost 34% over the last 30 days. Over the last quarter, it's up over 50%. And for the last year, it's getting way up there at 66.84%. So it continues to be a strong stock that accumulating a position in it is probably a pretty good strategy. AMD was at the top spot last week. It was up 40%. And for the week, it went up approximately 3%. And so it's looking good for this last week. The week before it had been down, so this week it's going up, and that's looking really good for AMD. And Best Buy is also putting in a strong week. So the best stocks here, there's a number of them that you can pick. I don't make suggestions on which ones that you might want to look at, but these are the ones that performed very, very well going into the last 30 days, and you might put them on a watch list for the next week or two, and give yourself plenty of duration just in case it does take a few weeks for these to actually get out there. Our expected move here for Apple is $13. We expect to get up here to about $510 at the end of the week, just under the $500 mark. And I expect that it can break 500 this week and get up to about 510. So that's our target price for it. And AMD, I've got a target price of about 87.67. So again, look at your indicators, look at your stocks and your buying triggers, and make sure that these stocks fit. But these are some pretty good stocks to take a look at. Now let's take a look at some of our bears. Looking at our bears for the week again in an alphabetical order. These are some of the stocks that performed poorly over the last month. This one was down 10%. BXP was down almost 8%. And CAH is down about 12%. So you can put these on your watch list for stocks that if you're bearish on the week. Gilead continues to do poorly. So does Intel Corporation. And Valero is one of the energy stocks is performing poorly. So now you have to come up with a outlook for the week. So let's go through and see what we think might be our outlook for the week to see if we want to accumulate more bulls or bears. Alrighty, so this is what I do. I put in the SPY and I have a quad set up on my charts, and I take a look at a number of different indicators. So if it's got a green background back here, that means it's bullish. If it has a red background, it means it's bearish for me. And one of the first things I look at is this DMI oscillator. Pardon me. If it's green, then I'm bullish. If it's red, then I'm bearish. And that's usually the right place to be. We do go through this area where we have some compression where it bounces from bullish to bearish, but that doesn't usually stick around for much more than a week or two. So it's a good time to accumulate positions in what you have as your directional bias. So another nice thing about this is this changes the color of the candles. In other words, if the candles are green, then we've got a green oscillator. If the candles are red, then we have a red oscillator. It doesn't have any bearing on whether that candle is actually bullish or bearish. It has to do with whether we are above or below the zero line on the DMI oscillator, which is different than what these candles will show. These actually show whether it was a bullish or bearish candle. So the first thing I want to do is look at the DMI oscillator, and then I look at the whole moving average. If those are bullish, then I'm bullish on the week, generally speaking. Now, we did come up to all-time highs, which were right up in this area, and we burst through that, but not with any real follow-through. So we did set an all-new high on the SPY this week, and the QQQs had a terrific week. The Russell lagged the others and had a pretty poor week. So depending on what stocks you're in, you probably could have anticipated that we would have had a pretty pedestrian week. So that's what we had a lot look for last week, was that we would be bullish but somewhat sideways, and that's what we have this week. So let's go through these different indicators. Now I have no background right here. You can see the candles have no background to them, so they're in transition, very similar to what we had here. It transitioned from being bullish to being bearish, and then back to bullish and bearish. So in that time period where we're in compression, I got no background because I have no bias. I'm not bullish or bearish, but my DMI would have said to my bias should be more bullish, so maybe a +1 as opposed to a +2 or a +3. So that turned out to be a good time to still be accumulating shares like Apple or AMD, even though they may have had poor weeks that week. And we also have a bullish hull. You can see the labels over here as to what they are. I'm getting a brand new bullish signal on the market forecast, and I continue to have a bullish signal on the high-low activator. So my outlook is primarily bullish, but I am maybe a +1. I'm certainly not a +2 at this point, because I do see where the DMI oscillator is starting to descend. That doesn't mean it's going to go to zero. It just means that it's losing some momentum. It could regain it like it did here. It lost momentum and then picked it up again. So we could be seeing something very similar to that. But I don't have a brand new PPS buy signal, but I do have a brand new ready aim fire. So kind of a mixed bag, but mostly bullish. So this week I've got a bullish one. You can look at your favorite indicators, come up with what you think is the outlook for the week, but mine is a +1. Alrighty, and we'll just wrap this up quickly. There's a couple of things that you can do to help you find some really good opportunities. This is what I do. I have 4 of the stocks that are in our bullish 20, and I have 4 stocks that are in our bearish 20. And I take a look at those, and then I'll drill down based on what I see here. And I'll just kind of go through each one of them and see what they're looking like. But this gives you an idea. MasterCard went through a period of compression and now is starting to break out to the upside. Now, this expected move line, this green line and this red line, are the expected move either up or down. Now, that's based on the implied volatility of the SPX, or the S&P 500. That's very different than the spreadsheet I was showing earlier. That is based on the implied volatility of the actual underlying. So this gives me a couple of different ways to look at the expected move or target price. You can use one that works best for you, but they're going to be generally in the same area. So based on the implied volatility of the overall market, I'm looking at MasterCard getting up to about $345, maybe $345.5. And that would be my target for any bullish position I put in. You can see here that I have about 518 on Apple, based on the S&P 500 volatility. So I'm looking at that going from 498 up to about 518 as a target. Now, looking at my bearish, I have red clouds here, I have red clouds here, I have red clouds. If I've got green clouds, or what, maybe blue, but if I have bullish clouds, then I'm probably not going to take a position. I want to make sure that the stock is currently bearish when I take a bearish position. I try not to catch the, right at the top here. That might have been a really good place to go bearish, but I had no reason to believe that Valero was going to go down. I would much rather stay with something that is bearish and just stay with it for quite some time. I don't try to catch the tops and bottoms. So Gilead continues to have red clouds. It continues to be a bearish looking stock to me. Valero is starting a bearish move. I would probably be looking for that to get down to about $50. And Cisco had terrible earnings. It's very similar to Intel. It just getting crushed, and I think it probably could get down here into the low 40s, lower than it is right now. It's already in the low 40s. And then Boston Properties, which is a real estate stock. If we look at your sector top-down approach, the real estate sector was right in the middle. It was pretty pedestrian, maybe a little better than the S&P last week, and a little less than the S&P this week, but pretty pedestrian. It's a good time to start accumulating a bearish position in a bearish stock that continues to be bearish, with a target down here of about 81.50, and give yourself plenty of room, plenty of time, because this might take a couple of weeks to develop. Not everything hits our target in 1 week. Sometimes we have to hold it 2 and 3 weeks, but I usually give myself about 4 weeks of duration. So that's my top-down approach. That's what I got for week 34. Let me know what you think. If you see something that might look good, let us know. We'll be happy to take a look at it and get back to you. So again, if you like what you see, please hit that subscribe button. Let us know how we're doing. Make comments in the comments below. And remember, good trade.